I know there are a couple of extra questions, so please find Rob online, and he will certainly help you out. Ladies and gents, Rob certainly being a disruptor. I love that word, disruption. And what we want to talk about right now is the disruption of VC, the disruption of venture capital versus crowdfunding. And so we're going to have a bit of a panel discussion over here. And for those of you who are looking to try and access funding, this I think is going to be one which is definitely going to be of great interest. To explore it properly, I'm going to introduce a panel of guests over here that they're going to chat, and they're going to chat through it. So in no particular order, I'm going to mention them, and they're going to come up over here. From Naspers, we've got Minette Haverman. From Hyber, we've got Vuyisa Kabaka. From Plug and Play, we've got Grace Lahori. We've got Clive Butkow from Kalon Ventures. We've got Jim Chu from Untapped, and Greg McFarlane from Edge Growth. They are our panel, and the person who is going to moderate our panel for us is from Think Room, and that is Catherine Young over here in front. So ladies and gentlemen, please a round of applause for our panel. I'm going to hand over my mic, so here we go.
Perfect. Thank you, Aman. So, cool. So I think just as a way of introduction, Catherine Think Room consultant. We've been around forever, as long as I feel my age. That's the one thing you have to know. The second thing is a mic, a mask, and glasses for the over 45-year-olds. Really quite a challenge to manage all of it. So I've got my questions there. I'm going to be moving around and away out of the way of the panel now. We've just come off an unconference this weekend, and it was fascinating. And I'm hoping that for those, welcome Clive, Yisa, who are not there, I'm hoping for some of the other panelists that were on the unconference as well, share some of your insights. Minette, you're going to have a lot to share as well, about just this early stage funding dilemma that we have. And we're going to try and continue the debate from here on. So just to start, from Jim, just for practicality, your side, quick introduction, and where you're from and what you do.
Morning, everybody. Oh, there he goes. My name is Jim Chu, and I'm an investor and entrepreneur from San Francisco, the one in California, Stuart, in case you're, just to clarify. I run a company called Untapped, and we do CapEx financing in emerging markets, including Africa. I'm also the founder and producer of a weekly virtual Shark Tank called The Nest. And on top of that, I'm a fairly active angel investor in Africa. Thank you.
Hello everyone, my name is Grace Lahori. I'm born and bred South African, based in Johannesburg at the moment. I'm here in my capacity as the Director Country Head for Plug and Play Tech Center. It's a company that is headquartered in San Francisco in Silicon Valley, Sunnyvale. And in short, what we do is sort of three segments. One, we are first and foremost an investor, early stage investor. Second segment, we do startup business development acceleration, and on the third side, we help corporates innovate, so corporate innovation. Thank you.
Morning, it's Clive Butkow. I was the ex-CEO of Accenture South Africa, built Accenture to about a 4 billion rand business, from where I retired about 8 years ago. I've also, in parallel with that, was an entrepreneur where I've built many companies, exited many companies, spent time building tech businesses, computer science background, but times in Silicon Valley, in India, in Israel, and all over the place building tech businesses. When I retired 8 years ago, I started my own company called Kalon Venture Partners, which is a digital disruptive tech venture capital company. We've got 8 investments to date, and we're probably closing another 2 in the next month. So we'll have 10 investments in the next, hopefully in the next month.
Morning, everybody. My name is Vuyisa Kabaka. Most people call me Chief in the ecosystem. My day job, I'm a partner at an innovation advisory firm called Hyber Group. We're a Pan-African company, so we have offices in Nigeria, in Kenya, and here in Cape Town. For the purpose of this panel, I've actually been asked to speak here as a shareholder in Uprise Africa, which is an equity crowdfunding platform But generally, as also as someone who's involved in broader crowdfunding initiatives that include Stockfella and Stockfells, basically as a form of equity crowdfunding.
Hello. Hi, everyone. My name is Manette. I'm with Naspers Foundry. Naspers Foundry is a 1.4 billion rand capital investment initiative which is aimed at growing the local tech ecosystem. And we seek to back talented tech entrepreneurs who are building solutions that can scale globally and that definitely have a very strong positive societal impact.
Hi everyone, it's Greg McFarlane. I'm the investment head for Edge Growth. Edge Growth manages around $100 million across several funds. More specifically, I head up the investment team for the ASISA Enterprise and Supplier Development Fund, which looks to invest in small, majority black-owned businesses in the value chains of asset managers and insurance companies.
Thank you. Thank you so much. So we're going to start rotating the questions one by one. So just for the sound, where do you want me to stand? Right here, and I feel horrible to stand at the back to you, so forgive me. Okay, so just to start, really, we know that Africa 2019 wasn't too bad. We started raising funding. We saw the money come in. And then Jan and Feb... Cool. Jan and Feb really still working, and then March hits. And it's this absolute dilemma. March and April, almost no money flows. We see the world starting to recover. And by June, July, little bits of money start coming through. But the reality is, I can still remember, I was in a garden in July on the phone with Keert van Zyl. I don't know if Keert's in the room. And we were talking about Grindstone, which I'm a co-owner of, and talking about a venture fund that we have to create because we still have this deep need to have this before VC money to cover this gap. So, Jim, I think I want to start with you. Just what are some of your thoughts? Do you experience the same across the world where you work and what you've seen? And any ideas and thoughts around same dilemma? How is it covered, this gap before VC? Because VC is not the capital, we know that.
Well, I think it wasn't apparent to me before I left Silicon Valley how important the entire ecosystem is, especially starting with friends and family and also angels, in helping incubate and mentor and, of course, fund the most promising startups and entrepreneurs to get to the stage that they can be investable by institutional investors. And so if you're missing that piece of the ecosystem, it becomes very, very challenging for professional investors with a fiduciary responsibility to LPs to be able to deploy capital effectively. So having that initial kind of earlier segment and especially the gap between friends and family and your first round, institutional round, that's really important. And in the discussions we had this weekend, it was apparent that everybody's focused on incubation or acceleration to get more and more companies into the institutional stage. And I think everybody's thinking about the right challenge and trying to address it. But I think, and I have to say that I'm an angel myself, so I'm very biased, but I think that getting more angels involved, and I would say local angels involved in the ecosystem, is extremely important.
Yeah. So Grace, from a plug and play point of view, really, you're entering the market. There's a corporate venturing side and stage, and what Jim was just saying around, we have to get angels involved. The gap still exists. We know that. And we're going to be talking about crowdfunding later. Forgive my back, Bisa. We're going to be talking about crowdfunding later. But one alternative way of bringing money in whichever asset class is through corporate venturing. Just talk to us a little bit. What are your thoughts on this gap from your perspective?
I think to follow on what Jim was saying, I think it's that I've personally witnessed that there is not enough local angels. So that gap is huge. And I think this is where, even as Plug and Play coming into the market, we have a huge focus on trying to play in that gap of looking at startups with a minimum viable product. It doesn't have to have millions and millions of revenue already, and really just helping them with that small check size, us not wanting to take over too soon, minority stakes, not taking board positions and sort of allowing them. So I think we need more and more investors that have the appetite, the risk appetite to play in that space, because we find that in the local economy there isn't enough risk appetite. And also to the point of sort of crowdfunding, changing the behavioral psychology around crowdfunding and education of crowdfunding, because that's also a great way for a lot more people to come in with smaller check sizes, because we can't, a lot of capital there's not a lot in South Africa. And so as you have more people educating and believing in this crowdfunding exercise, then you can also find VCs that will then be able to match, because they'll see there's attraction, and that could be a way to augment as well.
Okay, so Yusa, I want to follow on to that. So the crowdfunding, you have experience in this, and we want to understand a little bit more of this. So there's this thing about trust between entrepreneur and investor, right? And how do you see that? How do you build and keep that trust relationship that's built over time, many meetings, many coffee dates, over and over, versus the crowdfunding notion? If you can talk to us about that.
Thank you, Catherine. I mean, look, trust between investors and entrepreneurs, especially in an age where we also obviously leverage technology and digital. The fun part about crowdfunding we've had on the platform, both successes and many failures, so it's not exactly a perfect science, is that you get to present effectively the same investment case to a group of investors at the same time in the same way. On average, typically in South Africa, as early stage venture will meet between 40 and 80 people, potentially as early stage investors. Hopefully they do it right. They meet angel who are there, just not formalized, and get exposure to that. What crowdfunding allows you to do, and on average, a campaign on the Uprise Africa platform will be viewed by between 5,000 to 7,000 people. And this opens up an opportunity for a lot of people to be introduced. There are gaps primarily in the ecosystem around some of the investment education that needs to happen to, again, allow more people to ease their way into the investment space for limited risk profile. But I'm certainly someone who's been around for long enough to have seen at the beginning of our ecosystem where we are trying to get good enough ideas just to be investable. So I'm quite optimistic and hopeful that a day is coming pretty soon where enough people will know enough about investment and enough about the cycles of investment because of technology that they'll start unlocking the opportunity to invest in the early stage ventures at a risk base.
Could I jump in there really quickly? And this is a little bit of a plug, but I think it's quite relevant to this question, which is, as I mentioned, I run a program called The Nest, and it's a virtual online Zoom-based Shark Tank. So 2 entrepreneurs pitch every week to 3 angel investors that we recruit from around the world. And one of the unexpected things that we saw was how important that direct conversation was between the entrepreneur and the investors. Because at the end of the day, you want to be able to talk and have a real conversation. You don't want to just see a bunch of slides. You don't want to read a bunch of stuff, because you want to get a sense of who the entrepreneurs are. And so I didn't think you could really do this over a virtual platform, but you can really see people engaging each other on Zoom. And to a certain extent, forming a certain level of trust, because they're asking questions and they're asking questions. And then the second part of what you said, which is this education. But because this is a publicly, or I shouldn't say publicly broadcast, the SEC, no one from the SEC is here, right? Look, anybody can join and view these sessions. And because of that, professional and very well experienced angel investors are asking interesting questions, the right questions, and everybody's listening, including the entrepreneurs listening, potential angel investors are listening. And so watching the whole investment process happen live in front of your eyes is a great way to not only build trust, but also develop a bit of education.
I love that. So what we are saying is that you can build trust. COVID has actually been a blessing in that way, because we've been all forced to one place, and we're doing it fairly well. And you say that trust, you've got first-hand experience of that trust building over time. By show of hands, entrepreneurs in the room, if you don't mind, I just want to get an understanding. And by show of hands, keep your hand up if you've tried alternative sources of revenue, of funding other than just plain VC. Yep. And keep your hand up if it's crowdfunding in particular. I just want to get a sense. Okay, cool. I want to have a question to you.
You don't count.
Yeah, exactly. I want to have a question to the audience after this. So fantastic. Manette, in terms of the work that you do, have you come across any bits of alternative funding or crowdfunding, specifically success stories that you could share with us?
Thanks. I think the reality is that, we speak about trust, but there's a scoreboard of trust in terms of investors that have backed an opportunity when it gets to a life stage where, professional investors seek to deploy, considerable check size. And that's an equally important conversation. We know from the startups that we engage with that the value that angels bring into the stable, and then seed investors, and then you have your pre-series A and the like, and whichever label you want to attach to it, is considerable. And, Clive, we can have that conversation. We have it a couple of times. It's as important, the relationship between the investors who have sort of gone before in terms of the work that's been done, instrumental pivots, being shaped, hands-on support. One of the things we often do when we start engaging with startups, and the most instrumental first piece of work is governance and structures. And I think that the reality is that there's definitely a gap for crowdfunding in the market. But I think it depends on the roadmap of the startup. I also think it depends very much on the product and the service that the startup's looking to deploy. And that's something that needs to be taken into consideration.
I like your comment on the roadmap very well. And Clive, I think we've just had a really great example of between IDF, Kalon, and Grindstone. We got a good thing together where we literally looked away from individual companies funding and to the entrepreneur. And one of the themes that have come out of our unconference this weekend also was this thing of focus on the entrepreneur, the roadmap, the journey, and then as an ecosystem working together to see through all the various chains of funding, how can we work together. Just share some of your thoughts on, maybe you want to use that one as an example, or any other where that has worked, and what were some of the things that didn't work?
Yeah, I think typically so Kalon Venture Partners, we're a growth investor. We do some early stage. When I mean early stage, not seed. So we're, a startup has got a couple of customers, maybe a few POCs, but we absolutely love the team. We think the team is the right team for the right product, and it's a very, very disruptive product. So it's something that we believe can go to the 10 to 100x times through taking it, as Manette was saying earlier as well, and exploding it throughout and scaling it through South Africa, Africa, and all over the world. So that's the type of products, and a good one example is the one through Grindstone that we've just invested in. So we also, our philosophy is we don't like to single invest. Even though we are, lead investors, we like to lead the round. Not that we, are absolutely hell-bent on that. But we also like to co-invest because we believe, the more people we can bring around a table, and the more networks, the more relationships, the more human capital, the more mentorship, the much more chance that startup has got for success. Now, this is not just for startup. This is for Series A, pre-Series A, Series B, Series C, is where you have multiple investors. Because we believe, as I say, we'd rather have a smaller piece of a bigger pie than a bigger piece of a smaller pie. And we, mostly we've had where we have co-invested like this, where it's an early stage startup. If I look at the three companies that have invested, IDF, ourselves, and Launch Africa, we all bring very different things to the table. And it's just amazing within 2 months the amount of leverage and amount of product market fit we're already achieving in this company. And we think this company can go, right to the top. We really do, but it's going to take time. But let's go back to the main question. The main question is about capital. So we typically are a pre-Series A, Series A. Our typical size is about $1 million that we invest in. But obviously, like this car scan, we only put in, 5 million, opposed to 15, 16 million. So obviously the risk is higher. That's what we want to do. We were happy to write a smaller check. And we do write smaller checks where we really see that there's a fantastic entrepreneur, or it's a second or third time entrepreneur that's sold their business, made a few $100 million, don't necessarily need but they've got the scar tissue, and they've got the pattern recognition to really take this business to another level. So for me, the biggest issue here is about capital. We don't have enough in this country, and whether we're using crowdsourcing, or we're using angel investing, or we're using early stage VC, micro VC, whatever it is, we don't have enough of it, and we need to get more of it. But I also think we need to be innovative. Crowdsourcing, if I look in America, there's, I think there's over 1,000 really good, strong VCs where there's about 50 equity crowdfunding platforms. And we're talking equity crowdfunding now. So typically, on average, those equity crowdfunding platforms do about 13, 14, 15 investments a year. And the average VC does about 10, partner does about 10 investments per year. So you can just see from 50, we just don't have enough equity crowdfunding platforms all over the place. And I think we have to make this an asset class that is seen by entrepreneurs as a viable alternative to VC. Because people don't understand, most people here who are starting out a business, VC is not for you. VC is for later stage, typical venture capital. So when venture capital, I mean, where you really get hands-on, we get very hands-on, we open up doors, we help raise the next round of capital, we help find human capital. You're not necessarily going to find that with crowdfunding. I mean, you might be lucky, you've got good angel investors that do that. So you have to, I think Manette said it, you've got to know what capital you're getting, what is that capital giving you, because there's a very big difference, and I'm happy to answer that question, between what a venture capital will give you as an investor to what, in my understanding, and I've been in the crowdfunding space also for a long, long time working overseas, is what they can actually bring you.
There's good news on the horizon. I'll share those later. There's
Fantastic.
plenty of good news on the horizon.
Fantastic.
Clive paints a bit of a bleak picture. It's actually a lot clearer than that. So I'll share some updates.
I can't wait.
I'm going to come back to you on that. So I want to continue with alternative sources of funding. And Greg, we had a discussion over the weekend specifically about access to markets as a way of funding when the entrepreneurs are not yet ready for VC money or for pre-Series A money. Just, do you have some thoughts on using access to markets as an alternative way of funding?
Yeah, I think one of the things that we do, and I was going to mention it earlier, is that we don't only focus on the access to capital portion. We help to bridge entrepreneurs into corporate ecosystems where they can get access to market and access to skills. And I think those are some of the components that are really important about building success. I think one of the challenges that we've seen, and I'm sure Grace would agree, is that the access to market component comes often through larger corporates who tend to have a very particular idea of when a business is procurement ready. And I think one of the challenges we have, whether it be some sort of an approach to getting funding into a business through a corporate, or whether it be a regular procurement relationship, is that we need to get a corporate to think like a partner to those businesses and be willing to explore with them through the journey of finding product market fit and developing prototypes and getting scale and helping them to support these businesses through that journey. And I think what we've typically found is that there are some corporates that are excellent at that, and there is others that keep the bar at this level and won't change it under any circumstances. So I don't want to paint all with the same brush, but I think what we really need to do is to help corporates and some of those partners provide that access to market, not only in traditional procurement channels, but equally in the innovation space through R&D and hackathons and events that enable co-creation around innovation, and equally in some instances partnership on the actual seed funding side. And I think examples like Founders Factory Africa and some of these kind of venture builders where you've got corporate sponsors are great examples. But we need to think a little bit more broadly and creatively around bringing the corporates into the conversation of early stage investment, and indeed giving the rest of the market the confidence that these businesses are ready to scale.
Can I just add a point to that quickly? One of the things that, having worked around the world, and I've seen very, very successfully, and people don't think about this, and one of the previous speakers spoke about having her maps and her little pictures to show what product she was building, and more importantly, what problem that was being solved. One of the ways of actually accessing funding is what I call customer funding.
Yeah.
Now, customer funding is probably the best funding that any new stage entrepreneur can get. So you're not going to a VC, you're not going to an angel investor, you're going to your customer, those corporates that Greg is talking about right now, and you actually sell them your vision. You have to be a salesperson. You sell them the vision, and you get them to pay you up front for whatever you're going to do. And that funding is the best funding, and the reason I say that is because it's non-dilutive. You don't have to give any equity away. You don't have to give control away. You can actually get your business going by bootstrapping your business. And too many of us think, no, to make a success and we go and drink the champagne, we either crowdfund the capital or we raise it from a VC. And I'm talking about myself, so I'm disintermediating myself here. But if you really go and get customer funding, if you can really sell them that vision of the problem that you're going to solve or the pain points that you're going to alleviate, you can get those customers to fund your business. I've done that many, many times where customers have funded my business. I've then built a product market fit, built quite a nice sized business before I even consider going to a venture capital and raising the Series A round.
That's exactly the point. We, again, as an encouragement for the entrepreneurs in the room, if you find the customer, the money eventually comes much easier. I mean, that's just the reality. And what I do find as a frustration at times, and please, if anybody feels the same on the panel, add to that, there is this perception, and I suppose as an ecosystem, it's part of our responsibility to do more education, that if I find the money, the customers will come from an entrepreneurship point of view, and money is actually the last thing you want, truthfully. So any other thoughts on that? I can see I can see it.
Look, I'm a big fan of entrepreneurs who build their businesses on the back of customer success. Trust me, it's painful, however, but every bit of it is always worth the pain. In fact, one of my favorite people to follow on Twitter is a guy who founded a platform called Gumroad. And he's a very interesting, Sohail's his name, and he's a very good, interesting case study of someone who's had very successful VC and the pain of working with VCs and eventually buying out his VC investors and rebuilding his platform himself. And is now on a whole new kind of growth trajectory of building his company through his customer support and delighting his customers. And he's seeing and measuring the metrics of performance very differently. In terms of the size of team he's been able to build, the kind of products he's able to build, and the kind of manner in which he can run his companies. So again, we're not here to bash VCs. I think VCs are very nice people.
Absolutely.
Some of my
We
favorite
got broad
people-
shoulders, okay.
Some of my favorite people in the country are VCs, so I'm not here to bash them. I think the challenge we have in South Africa around early stage venture funding is that too many entrepreneurs come into VC too early. As a result, that effort, and again, the VCs in South Africa are quite easily available. That's the other thing, again. Not to say that they should be kind of more difficult to, I mean, you can literally go on the SAFCA website, their names are there, their details are there. If you're going through a 12J VCC fund like Clive at Kelon, his name, his email address, his entire contact details are there. So it's very easy to get a hold of the VCs, and yet it's maybe a bit harder to get a hold of anybody else doing anything else around investing and funding. So maybe there's something to be said about how we look at that. My sense is that the key is a lot of founders need to know where they are in their growth trajectory and what type of funding possibly looks best for them to generate and grow their business. So that's kind of my position.
Perfect, Grace. And then I'll come to you, Monet.
Yeah, I just want to interject, and I think, and maybe I'm about to steal what you were about to do, but it was very powerful to see that as you were going through how many people have approached VCs, and then there were only 2 when you asked them how many, actually considered crowdfunding. So to the point that was earlier said. So yes, I think that's a good thing that the VCs have made themselves accessible through these organizations of VCs. So I guess then it's more a question. What are we doing to ensure that there is more awareness of alternative ways to get investment to help the entrepreneurs, given the gaps that we're seeing?
Yeah, exactly right. Monet.
Yeah, absolutely. And I think that, importantly, if you look at the ecosystem holistically, each player brings a different set of skills and value to the table. And I think the ecosystem has evolved quite a bit in terms of communication and partnership and having conversations, because the reality is sometimes we receive pitches that are ideation stage. It's not for the lack of being inspired or excited. The fact is it's not our DNA to back entrepreneurs at that life stage. We're not best positioned to actually help guide that opportunity to really reach its full potential. And I think that there's a lot that's happened in the ecosystem, but as different role players in the ecosystem, we have a responsibility to engage, from growth stage right through to incubators and angels, and having these conversations more frequently than once a year on a panel. That's what needs to happen, and I think that has improved a lot. But there's obviously considerably more that can be done to
Absolutely.
facilitate that network. Because the worst thing to do to an entrepreneur is to shut a door without opening another one. And I think that's kind of a philosophy I've tried to adopt in terms of pointing someone to a door, a trusted associate, someone who's in a different part of the value chain that can take a look and give it a real shot if it's worth its legs.
Love that, Jim. I can see you have thoughts on that. Yeah, good. I absolutely love that comment. And again, something that came out of the weekend from an ecosystem responsibility point of view. Love that. I think we're going to use that as a slogan, Manette. Don't, if one door shuts, make sure that you point to another door that can open. Again, some participation from the entrepreneurs. When we speak about the funding value chain end to end, would you know exactly which funder to approach for a particular piece of money you want in your business based on your life stage? Do you know that? The yeses. The no, sort of, yeah? No, no? Okay, so this is such a valid point. If we go to get, I don't know, tablets for a sore tooth, which I am having at the moment, and I go buy Smarties from a supermarket, it's just not going to work and really ineffective. So it is really very important for us as an ecosystem to explain that better, I think. But as an entrepreneur, you also have a responsibility to figure out what is the mandate of which funder, how do they fund, and when do they fund, from the friends and family into the angel, into the pre-Series A, into Series A, into Series B, and later on.
Can I just make a quick comment? I mean, my advice to any entrepreneur is, you've got Google, you've got the internet, you can find out exactly where I invest, what stage I invest in. So I get people coming with manufacturing companies. I'm a digital disruptive tech venture capital company, and I get something to manufacture beans. It's just, you're wasting your time and you're wasting my time. So just, the important point here is you want smart capital. Lazy capital is not what you need. If you really want capital, get smart capital. Capital that can help you open doors, that can create distribution, help you raise the next round of capital. That's the type of capital that you need. So just as much as we're going to do our due diligences on you, do your due diligence on us. So speak to our entrepreneurs, speak to the ones and find out, do they actually add value? We all say we add value. Every VC will say they're smart. Every VC will tell you they add value. But I'll tell you something, it actually doesn't happen in practice. But the only ones you need to speak to my customers or my CEOs. Do we actually get involved? Do we actually add value? So there's no excuse for you not to do a due diligence. Don't just say, this is the first term sheet, it's the only one I'm getting, I'm going to take that capital. If you've really got a great business, and you've got one that's growing and the velocity's there and it's growing double digit, you will raise capital, or the capital will knock on your door. Be rather selective and pick that right partner. Just remember, when you're picking a partner, I learned this in my days in Silicon Valley, they said, when you invest in a VC invests in you, you're going to form a relationship longer than probably the average marriage in America, which is about 6.5 years. You're forming a 6 or 7 to 10 year relationship with your venture capitalist. So pick it very, very carefully and pick it wisely.
Fantastic.
Yeah, just jumping in that. So, I think also people need to keep in mind that venture capital may not be the right model for you, for your business. Everyone thinks that venture capital is a silver bullet, it's a panacea, it's a cure-all. It's not. There are certain kinds of businesses where it may make sense to get venture capital, but there are many that may not. And to Clive's point, you should be talking to investors who have alignment with your vision, because they're the ones who will then support you through the marriage, through the thick and thin, but also help you and your company grow over the years. And so I think it behooves every entrepreneur to think about, okay, who should I be aligning myself not to or with, not just where the hell am I going to get the next check from?
Yeah. Absolutely love that.
Just to say, I mean, look, again, we here talking about how crowdfunding is disrupting VC. And again, I said, I promised I would share the good news. And I'm a bearer of good news. So over the past 2 years, the FSCA has been researching crowdfunding globally, using case studies as far afield as Malaysia, UK, and the US. And the first Category 1 license for crowdfunding has just been issued in South Africa. But I'll leave that particular platform to announce that publicly to everybody else so that you get excited. But the challenging news about that is that it's probably not going to benefit South Africans. So that's the irony. But at least the license has been issued. Uprise for the last 3 years has operated with a very weird legal framework that we've, again, got some kind of conditions of approval from the government, and it requires about 5 key legal contracts for us to operate a platform. So we're hoping that cost alone will kind of shrink to a simpler cost. But the platform is not Uprise, just to be clear. But more than just this, there's a number of new things that are coming up that are going to be very disruptive to VC directly. Like the fact that a lot of the stock exchanges are looking at alternative ways that can make available funding through the exchange. So JSE made an announcement recently, but they're probably about 7 months away from actually releasing the core platform. But again, there's more news from the different other exchanges that are coming up. Over and above this, there's a new model that I've just been part of called Community Capital that, again, uses technology and leverages the stock-fair model and cooperative business models to finance it. And again, we raised the equivalent of about 2 million rands in 6 weeks with 100 investors. And we purchased an asset that is, again, going to be public. All this information we've tried to do very publicly. So again, the key to crowdfunding for anybody, if you're a great marketer, if at the core of what you're doing, there's a product or solution, but you yourself as a founder, a great marketer, consider crowdfunding, okay? Because once all the legalese has been done, once all the legal frameworks have been fulfilled, and the dots have been dotted and T's crossed, crowdfunding at its core is a marketing campaign. It's riling up the excitement of potential customers. It's a great test case for whether or not the market's going to adopt your solution. And it's a great kind of opportunity to bring in a whole network, a group of people within your circle of influence to invest. So if you have that personality and that profile, or have a product business that lends itself to great marketing, consider crowdfunding as an alternative way to VC funding.
Fantastic, great.
I think maybe just to come off on the back of that is that certainly I think what we need across the ecosystem is partnership, and we need success stories which build trust. So whether it's at the seed stage and you've got an angel investor or a crowdfunding platform, or it's Series A, B, C, etc., I think what we really need is an ecosystem as success. And I would just like to encourage that we not only look at success from the perspective of raising capital, but returning capital. You can raise capital and you can have 100 different businesses.
What's that? Different panel.
Different panel.
So certainly, I think from the perspective of the entrepreneur, many raises and lots of capitals entering the ecosystem is great, but that'll only last so long if you don't show risk-adjusted returns to your investors, whether they be an individual, a pension fund, a corporate. I think what we need to prove is that success of money in, money out, and of course jobs and transformation and all the other benefits of entrepreneurship that everyone agrees to, but you need those to be hand in hand. Otherwise, someone's going to lose and everyone's going to leave the party.
Yeah, absolutely love
It would be nice to have heard Rob talk about that, by the way. We should have had Rob speak about how much money do you return to his investors in the 9 years he built his company with.
Exactly right. And just to close out then, thank you. Lovely segue, actually, Greg, into the last question. So from a crowdfunding point of view, and personally, I feel crowdfunding, there was a panel yesterday, a virtual panel, I don't know who tuned in, and there was a question to the gentleman, I can't remember his name, and they said, so what does product market fit look like? And his answer was, if you're still asking that question, it's not there. But the point is, for me, crowdfunding is almost a non-linear way of how we're used to funding, because it's about the marketing, isn't it? Exactly as you said. So with that brings my last question to the panel, and feel free to jump in, and then we have the last couple of minutes for Q&A from the floor. Please prepare them. So diversity is a big topic that was discussed this weekend. We know, so there's this perception that the funding goes to those people who look like the funders, whatever that means. And what was lovely about this weekend is that we got to a point at the end where diversity wasn't necessarily about the skin color or my gender or my language, but actually diversity in thought, diversity in how I approach life, etc., etc. But the reality is, it feels like, but I want you to agree or disagree, that crowdfunding as a platform could potentially take this issue of diversity to a different level, where it doesn't matter what you look like or sound like or feel like, but it's about, do you market this well enough, and is there an opportunity? Any thoughts?
Let me just, I want to give you some empirical data, so not my opinion. So in 2019 in the US, As I said earlier, there were about 56 crowdfunding. I'm talking about equity crowdfunding now. I'm not talking about Indiegogo, which does product crowdfunding or donations-based crowdfunding. I'm talking about equity crowdfunding, where you sell a piece of your company and it's equity. So of the 56 companies, they looked at venture capital, and about 11% of all the venture capital dollars that were spent in the US went to minorities or went to women. Also, only a very small percentage went to the smaller areas of the US, so not the Silicon Valleys or the Bostons or the New York. With that 56 platforms of crowdfunding, about 30% of that, so from 10% to 30%, went to, from a racial point of view, more diversified, and from a gender point of view, it was more diversified. So both, the crowdfunding doesn't have a color code, which is great from a crowdfunding point of view, but secondly, it also allows people to access capital that are in the smaller markets or the smaller cities of a country, which I think is unbelievable.
Yeah.
And I'm talking about the pros, and I'm supporting. There are obviously cons of crowdfunding, but there's a lot of pros to solve this exact issue, and that's just empirical data.
Fantastic.
I mean, I'd love to just come at it from a slightly different perspective, which
cool.
is actually from the investor's perspective. And I'll tell a little story because I started, the first venture fund I invested in was in 2007 and in the US. And I went to, late teens, I went to an investor meeting. And I walked into the investor meeting, there were about 50 people there. I was one of the only non-white males in the room. Imagine, right? The GPs aren't sitting there going, we're only going to take money from white males. No, it's so much of it is about the network, about who you know, you get introduced to, and it's about the trust, right? And so I don't know how I got introduced to this group, but I did, and luckily so, they did a good job. But if you can imagine, if you can broaden somehow the networks or the opportunities for investing into the space, I think it also increases the diversity of the investment pool or an investor pool, which also then leads to what Clive is talking about. It creates because at the end of the day, LGPs need to sell their fund too, and they need to sell it to somebody. And the person who writes the check ultimately has a big influence.
Yeah, I love that. Grace, closing thoughts on this?
I think closing thoughts on my side is I agree with the notion that crowdfunding is definitely a way that can help with diversity, in the sense that I think what came out of this weekend was a lot of the times people struggle because they don't have the network and they don't know how to access the network of people with capital. Now, if there's better awareness and education around the benefits of crowdfunding, you can say to people, guys, instead of going to buy that next Louis Vuitton bag, put it into my business and you will get even more and you'll get a Chanel bag sort of later on. So I think it's, if you go to your...
Can I use that example in the future? I might be very
You're more than welcome to. So I think that's where, you go into your community and say, small check sizes, let's bring it all together and let's bring this product to market and make a success of it, and you'll get more to come back to consume with.
Yeah. Love that. Lisa?
Like I said, look, I think the reality of South Africa is that investment is happening, whether or not you're aware of it or not, whether it's happening in circles that don't necessarily always invite everybody. The interesting things and comment I would make to anybody doing those deals is that even when you do your structured syndicate, it's quite interesting that you can invite people of color into your syndicate. You don't have to, if you look around and there's a bunch of white males, you can make a conscious decision. That's what the country requires of you, but that's just a side comment. But I think the reality of where the future is going is that, I think part of what everybody needs to pay attention to is that there's all these pockets of things going on. So it's not one singular view. So partly in supporting Clive's point, I think South Africa has a market of about another 8 equity crowd-based funding platforms easily, because there's enough capital in the market, there's enough middle-class people that are there. If you look at enclaves like Durban, how they're growing, a bunch of billionaires live in Durban now. But who's now nurturing those investors who are ex-Didata, ex-SAB, these kind of guys who are now gone back home to now invest very diligently together in one single... Another form that's, again, the government is kind of put up, which is helping some kind of way, is the VCC 12J. In the last 6 years of this whole act, I think there's about 170 you guys now, 200 you guys now. And again, I think the capital's over 6 billion rands raised in early stage venture. So again, if you're not sure, call Clive. He'll make a tax benefit case for you around how you can get your money back as
I
a
like
checks
this
incentive. So there are ways, and again, the collective crowd of how we structure funding doesn't only exist on one singular platform. Requires us to open up our eyes and sort of say, okay, how do I chip in my 1,000 rand, make sure that that 1,000 rand over a 12-month period returns at least 15% to my bank account. That's better than any savings account in South Africa today. So just to think about it.
Fantastic. Manette.
Those are good thoughts, Vu. I think, just on the topic of diversity, crowdfunding is one aspect of it, but I think from an ecosystem perspective, it's role models, right? So when I studied, I didn't know that a career like venture capital existed, let alone a woman can do it. I think, and that's something that's really evolved quite a bit in the industry. I think sector-specific funds make a huge difference. It means that the best win. And that really creates an equal playing field for everyone to participate. I think more particular focus on, specific geographical areas makes a huge difference, right? Everything happens in Cape Town, okay? Lots happen in Joburg now. What's happening in PE? What's happening in Durban? What's happening in other parts of the country? And the ecosystem, all the different players have a role to fulfill there in terms of actually firstly, just an educational drive around what is venture capital, what's a career, what does it mean to be an entrepreneur, how do we open up networks? Those are all aspects that are quite important to address the diversity, I think, locally in the market, and bridge the access to funding for a lot of individuals who really struggle and don't have the typical networks.
Yeah, and you remind me that as part of AfricArena and as part of last year's work out of the Unconference, the Digital Collective, don't know about you in the room, but do you know about the Digital Collective? There is an amazing amount of information there around how, the value chain of funding, term sheets, templates, tools and tricks. So please go check that out. Over to you, Greg, to close for us.
Yeah, maybe just to not rehash the crowdfunding comments, because totally agree with them. I think it can certainly open up channels for diversity. But I also think across the asset owner base, it's those asset owners that need to come to the party and say, I want to be funding diversity. Whether it's through ESD, whether it's through corporate pension funds, etc., we need to be setting mandates and coming to the table and funding active diversity into the ecosystem if we want to see that pan out. As a white male investor, over the last 9 years, I've only funded black businesses, which you could argue is not diverse, but I think we need to take active roles in, from our career perspective and asset perspective, making allocations and creating mandates that open up the floodgates to a much broader diversity of entrepreneurs.
Fantastic. You have been fabulous. We have time for only 3 questions. So there was a hand up there. Thank you. Perfect. Thank you.
I've been tested COVID negative.
Good afternoon, everyone. Great discussion. Missed most of it, but the important parts I got. My question would then be is, in terms of VC versus crowdfunding, if I'm a time-sensitive social impact business, which route would be best?
Who takes that? Who wants to take that?
I'm happy to, if it was a question, you're a social impact business, and which route should you take?
And time sensitive, yeah.
Say again?
Time sensitive social
Yeah, I
impact.
think, at the end of the day, I mean, a VC's out there to get returns for their LPs. So there are some VCs that obviously look at the triple bottom line, they look at, making money, they look at social impact, etc. And those are the type of guys you could potentially go for. A lot of VCs don't have the triple bottom line and focus on risk return and the rewards to the investors. But I must say, there's a lot of crowdfunding platforms that are very much in line with social impact. If you look at Kiva, and there's so many good, unbelievable crowdfunding platforms that actually get a lot of capital into them that helps young businesses, small businesses actually get off the ground. Now, we would probably know more than I do about some of those crowdfunding platforms, but I would say, in all honesty, there's both, but there's going to be a lot more crowdfunding opportunities for that type of business than you'll get from a traditional venture capitalist. Unless they have a totally different mandate from their investors, typically they are there to make big returns for the investors.
Fantastic. Thanks, Clive. Do we have another question? There's a question at the back.
while we wait for the question, time sensitive, I think anyone raising money, you need to respect the process. So always put in at least 12 weeks minimum to any capital raise that you're doing. So even if you're good, give 12 weeks because there is a lot of toing and froing and due diligence that follows even a positive term sheet.
Yeah. And 12 weeks at a minimum, I think.
Yeah, at a minimum.
Okay, we are out of time, so quick question there.
Okay, thanks. Clive, so I mean, we chatted a bit about it earlier, but in terms of, so VC funds structured in South Africa, but maybe with a predominantly offshore investor base, I mean, is there anything that, you know, I mean, we chatted about, but I'd like to open it to the floor in terms of structuring that you could recommend in terms of that type of scenario?
Well, I think the structure, and I'm interested to hear what Manette says, but the structure of the fund is one thing, and the structure of the actual investing company is another thing. So a lot of LPs, if they are going to put, and I've been speaking to LPs around the globe, and they don't want to put into a company that is domiciled in South Africa. They are happy to put money into, a lot happier to put money into companies that are domiciled globally. So as a venture capitalist, our local partners or our LPs, if they are not from South Africa, I haven't come across one that would be happy to domicile in South Africa. And the problem is just exchange control, because you can make a fortune of money, but you can't get it out. And I know Saab is getting better, et cetera, et cetera. But that's the one thing. Then on the entrepreneurial side is another thing. So forget your venture capitalists for a second. I think Rob spoke very clearly about that. If he had his domiciliation offshore, the potential exit value would have been much higher. So we look at our companies now, when we make an investment being a 12J, they have to be South African domiciled. But once we've done that, they can be domiciled anywhere in the world. And if you really want to raise a $5, $10, $20 million round of capital, you either go to a Naspers foundry or you go to an overseas investor. Because honestly, the VC asset class in South Africa doesn't have that sort of capital to invest in a true Series A, Series B.
Fantastic.
So you would have to go offshore.
Fantastic. Thanks, Clive. Thank you. Can we give them a round of applause, if you don't mind? Thank you very much, Greg, Manette, Vu, Clive, Grace, Jim. Thank you very much.
Amazing, amazing. Guys, please, one more big round of applause for our panel over here. Grace, I love your jersey. You need some venture capital money to afford that jersey, by the way. Jim Chu, I love your shoes. Is it the same one? I'm not sure. Guys, that was a lot to take in, and I know that you guys are going to want to pick the brains of our panelists, and you've got many questions. So what we're going to do is we're going to allow you that opportunity. So we're going to break for lunch very quickly. There's some snacks downstairs over there, so please go ahead and break for lunch now. We'll sort of ring a bell once we come back and start our second half of the proceedings. Before you go, though, can I ask you to give one more round of applause to our panelists over there? Thank you very much, guys, for those insights. We'll see you after lunch.